Nvidia, the name on every investor's mind this week, not just because of AI hype, but because a new earnings report could redefine where this stock goes next. Today, we're answering the real questions every smart investor is asking right now. How strong were Nvidia's AI chip sales in the last quarter? Which countries are driving demand the most? What should you expect from the next earnings report? And most importantly, should you buy, hold, or be cautious right now? This is not hype. This is real analysis. Nvidia typically reports earnings about 6 weeks after quarter end. If history is our guide, and analysts aren't expecting major delays, the next report should land in late January or early February 2026. We'll see revenue, EPS, and demand expectations for the quarter ending October, a period that includes major AI infrastructure ramps. That means new AI model deployments, enterprise data center orders, global hyperscaler spending. Wall Street's consensus, expectations are high, perhaps too high, and that's where psychology comes into play. The last earnings report revealed Nvidia's AI chip sales were far bigger than many analysts forecasted. Here's what we know. Data center revenue was the largest driver. AI GPUs like the H100 and H200 saw strong uptake, and emerging models like Blackwell helped sustain demand. Certain regions, like the US, Europe, and parts of Asia, accounted for the largest share of data center purchases. Interestingly, China showed continued demand in cloud services and AI deployment, even as restrictions made certain high-end chips limited there. In other words, global demand for AI compute is not a US-only story. Let's break this down by region. First, North America. Massive hyperscaler data center builds, enterprise AI deployments going live, most revenue concentration here. Second, Asia Pacific excluding China. Cloud providers, tech AI stacks, rapid enterprise adoption. Third, China. Growing interest with H200 variants allowed, but geopolitical restriction on top-tier GPUs. Fourth, Europe and Middle East. A mix of enterprise and government AI use cases. This geographic dispersion is why Nvidia's revenue base looks diversified and not reliant on one market. Psychologically, that gives investors comfort that Nvidia isn't a single market play. Some analysts expect continued strength, especially as AI data centers scale. Others warn that supply constraints and geopolitical trade tensions could temper growth. The consensus view includes revenue in line with or above last quarter, continued strong gross margins, and earnings per share near or slightly above expectations. But here's where the psychology plays in. Markets hate uncertainty, and when expectations are priced in, the actual numbers need to beat, not just match, to move the stock upward. So even if Nvidia reports strong growth, the question becomes, did it surprise enough? Now the million-dollar question. Should you buy Nvidia before earnings? Here's how to think like a seasoned investor. Bullish signals include AI demand still accelerating, global sales broadening, and next-generation GPU roadmaps supporting growth into 2026. On the bearish side, earnings are already priced aggressively. Trade tensions can limit certain high-end chip exports, and any signs of slowing orders could trigger selling. Remember, price movement after earnings is often more about guidance than results. If Nvidia says future demand is strong, the stock goes up. If guidance weakens, even good numbers won't save the reaction. That's the psychology everyone on Wall Street lives by. Nvidia is not just a tech name. It's become a sentiment barometer for AI investing. When Nvidia beats expectations, AI stocks rally, speculative money flows in, and sector optimism rises. When Nvidia misses, risk assets pull back, profits get booked, and rotation out of tech happens. That's why this earnings report isn't just another number. It's a marker of where the market believes the AI story is heading. So here's the bottom line. Nvidia's next earnings could be a make-or-break moment. Not because AI demand is gone, but because expectations are high. Beat expectations, momentum continues. Miss them, and profit-taking hits hard. So, should you buy ahead of the report, or wait for the post-earnings move? That's the question, and the answer depends not just on the numbers, but on how the world interprets them.